Let's welcome in now Bob Elliott, Unlimited co-founder, CEO, and CIO. Bob, always good to see you. Listen, stocks are surging, Bob. I've got the Dow popping more than 1,400 points right now. Let's just start there, Bob. Your response, your reaction to what you're seeing in the stock market.
Well, I think basically the result of the election is that we're going to receive much more accommodative fiscal policy than was previously expected, particularly once the Trump administration takes office, and that into an economy that is already pretty strong. Growth around 2 or 3%. You have unemployment that's close to multi-decade lows, and financial conditions that are already pretty easy. That's the sort of combination that can give rocket fuel to this economy. And I think while there's some concerns about the bond market, yields starting to rise on the long end, in a lot of ways, what we have is the Fed, who is endorsing relatively aggressive cuts on the short end, which should probably keep that long end under constraint and not upend the apple cart in terms of the overall expansion dynamic that we see going on.
But how much is the Fed going to be constrained by fiscal policy next year from continuing to cut, Bob?
Well, I think the initial intuition is that, if we have expansionary fiscal policy into a relatively strong economy, that'll run the economy too hot and the Fed will need to be a little tighter than people had expected. I think the challenge to that is the fact that it's going to take a little while for the Fed to have any indication that the economy is too hot. I mean, the Fed has already looked at core PCE numbers that are running, above their mandate and has made it clear that they are comfortable with that picture on the expectation that inflation is going to come down. Given the lags in reporting that we're likely to see on inflation, we could easily see well into the second half of next year before the Fed starts to really get any concern about an elevated inflationary environment. So that means, the direction of travel for interest rates is pretty clear, as Chairman Powell has said, and I think they're committed to their easing cycle, regardless of what prospective fiscal policy looks like at this point.